What's going on, guys? Welcome back to another study. We'll be covering price action on gold. Took a long, actually a couple positions, which we're going to cover. The day was Tuesday, July 23rd. So that is yesterday for me. I just used the replay tool to back up time a little bit, so we can kind of emulate what my thought process and everything was when I was in the trade and how I managed it, where I wanted to target, all the good stuff. So, starting off here on the hourly time frame, what has gold done? End of last week, we came into this low, went long, okay, moved away, leaving liquidity at the lows, okay? And then earlier this week on Monday, we ended up running down and grabbing that liquidity, okay? And from there, we start moving bullish to the upside. Cool. So, first area I was interested in seeing price to was returning back to this high here. You can see how we stabbed into it, okay? And had a false reaction to the downside, clearing internal liquidity, okay? Clearing that internal mitigation down below is at the extreme. This was in Asia or early London, however, so I wasn't awake for this. And then we move towards the high that we built liquidity at. Perfect. So now I want to see more liquidity built. Simple stuff. If I look to the left-hand side, I can see that we've taken this low, price came up, returned back to this area up here, and moved away, okay, just like this. So price moved up here and then moved away, telling me there's liquidity above here. And now look what price is doing. If I drag this all the way over, we've now respected that and again moved away. So that tells me now we're building liquidity up here. I have an area I can target and buy into. Now, in order for me to buy into that, I need to see liquidity taken in the opposing direction. So right away, what do I see? High taken. Price returns back to the low here, moves away, leaving liquidity down here. Okay? And then we end up going long, respecting the high, and moving away. Perfect. Now I got an area to buy into. All right? So this is, I believe, New York Open. Now if I skip price up a bit, look how we're hanging around at the low. Okay? Took the highs to induce buyers. This is a trap. We will not be trading from this. Okay, so this red box is a no-go. Again, take the high so buyers are induced. We come below, stall here for a bit. If I drag this over, inducing buyers to be buying this position. And then also, we do want to see price below this low to the left, right? So if I continue on, perfect. Now we trade below. I believe I ended up going down to the 1 minute when I was looking at this in live time. So let's keep following on with price. So now, what happens is we have now taken highs, okay? Same concept still applies here, just like this. We've taken out this high, right? Where are buyers going to be buying from? Back down here at the low, okay? And we are not interested in taking any positions down here, even if it goes long from here. That's not for us, okay? So we can mark that out and kind of anticipate false reactions, and we do for a little bit, okay? For about 5-6 minutes. And then we take the low and trap the buyers. Cool. That's exactly what we want to see. All right. This is now 9:53, so it's about almost 2 hours into New York Open now. Now we want to see price back up here. Okay. Again, sellers in up here. We've respected it, moved away, and now on an internal basis, we've cleared out buyers here. Right, so anybody looking to take positions in these areas, okay, and here, like we spoke about, they're all taken out of the market. And now on a more smaller perspective, right, on the lower time frames here, we've had this high taken, okay, then price return back to the lows, false reaction up, and then sell off to take out that liquidity. So now, how can we get involved in this? Well, if we had a liquidity block to the left over here, that is a easy buy entry as soon as this low is taken, right? So if I have some sort of a liquidity block left like this, okay, I would be pressing buy here, and my stop loss would go, if you look at my cursor, below that liquidity block, okay? But obviously, there was no liquidity block to the left-hand side over here, so there's no extreme entry available to me. I will be waiting for more of a confirmation-based entry. Okay, so if I continue along with price, now we're getting false reactions at the highs. Okay, no problem. And there it is. So we take out the high, right? Where is retail going to be induced to buy at? Right here. Okay. We want to see price below here. And what do we have right below? Simple stuff. Nice liquidity block. So how can we enter this position? So if we want to see price below the low, that means anywhere below this is a buy. Now, you can take the buy like this, right when the liquidity is taken with your stop below, or you have the opportunity to press buy when this candle's tapped. And if you look below that, there's another M1 imbalance there. There's another candle tap here, another imbalance here, and one more. So there's two full imbalances you can look to take entries from. This being the extreme, okay? Or you have as soon as the liquidity is taken. Like I've told you guys before, I'm not too bothered about getting the most perfect entry. I'm okay with taking it as soon as the liquidity is taken. So in this example, as soon as this low is taken, I'm good. I'm entering my position. And as long as it's 3 times my risk, I will be taking this, right? So let's fast forward a little bit more. We come to the low. This is where buyers are now looking to take positions. Okay, look, little wick rejection. Trade back into it, stall for 1 other minute, and then we have another false rejection. Maybe stalling, inducing more buyers. Okay, coming a little bit deeper, and then finally taking them out. This is our entry there. Okay, perfect. Move this over. Buyers trapped on the smaller perspective to provide us that entry, and again, we're able to take this because of the liquidity block below. Okay, this is, in this example here, the candle tap would have worked here. Let's see if it comes deeper because I don't really remember, but we have another one here. And then the extreme all the way down here. So a couple different opportunities. I like to just, again, keep it simple. When that liquidity is taken, I'm taking that buy. It comes to this one. Perfect. So we move this. Does it come to the extreme? It does. Even comes to the extreme. And then, like I was talking about to you guys earlier, I typically don't wait for these type of entries. And I recommend you guys don't either. The direction is the most important part when it comes to trading, guys. So you don't need the most pinpoint entry. I know some people are okay with taking 1 to 2.5 and stuff like that. I typically won't. Again, 1 to 3 is usually what I'll stick to on the lower side. In this example, it's over a 1 to 5. So taking it as soon as this low is taken here. Let me make this red. As soon as this low is taken is more than plenty, right? Because you're not getting greedy. You know that you're going to be able to get into the trade and involve yourself. Waiting for all these imbalances to get tapped, guys, it's not the most best way to go about it. Again, the only time I ever will do that is if I need the RR to increase a little bit more, right? If I'm not reaching that 1 to 3. So let's just say my target was right here and it's a 1 to 2.8. I'd allow price to come a little bit deeper. Now the RR makes sense. Okay, so I hope that makes sense to you guys. Cool. So entry taken there. We're in a little bit of drawdown. It is what it is. As long as we stay above this liquidity block, everything remains valid. Okay, and we actually come to the very, very extreme. It is what it is. Sometimes it just leaves equals because it's just going to be a future target, all right? But it respects the liquidity block overall. I'll even draw it on. Respects it, okay? And then starts moving away to the upside. We got liquidity on the M1 right here. So you can mark that out as an added confluence for price to run to the upside. We have an inducement high with this being a, oops. So when I was looking at this in live time, I saw that we've taken out that liquidity here. This is a liquidity block technically. So I did expect price, if we ran here, we could have false reactions for a bit. However, it wanted to come, and then maybe continuation, okay? But these are things I want to anticipate, okay? Inducement high taken. This is a liquidity block, so it can get temporarily respected. Overall, it will be a trap. We want to anticipate it to be a trap. But it's possible for us to get reactions up here, okay? So let's continue. Okay. This was a little more later in the day, but I do remember this. Excuse me. If you come back a little lower. liquidity block. Okay, level of liquidity run. We have high taken here. This is going to be a trap. We will not be buying from that. Instead, look how price respects it essentially over here once, twice, moves away. Okay, so we got liquidity here. And then if you look to the left, we still have these lows that we have yet to be taken. And that's what price ends up running for, right? So why did this low print? It's simply because it was respecting this area to the left. So I can even draw a box to try and make it a little more clear for you guys. Just like this. Okay, ends up running for that low. Now, anywhere above this liquidity block is valid. So again, when the low is taken, when the liquidity is taken, stop below the liquidity block. And what can we target? Well, price simply, this high respected this high. We got liquidity above here. Here's a little scalp, 1 to 3. And look, on a very small perspective, look, high taken, low taken, liquidity block. Surprise, watch. High taken, low taken, liquidity block, and then finally highs are taken here. So there's a little scalp. Again, the whole concept, everything's still the same. It's just on a very small perspective, but I just want to make sure you guys understand the fundamentals of all this. All right. So if you did take this scalp, that was the target there. Ends up coming lower after that for a bit more. We're still in this buy down here, don't forget. This is late in New York. Now, I believe we end up hitting target in Asia, so we'll speed this up a bit on the M5. All right, we're coming into this area up here. So, there it is. Maybe false reactions out of it, we'll see. Stalls there for quite a bit. Still stalling there, false reaction down, and then boom, target hit, I believe. There you go. Cool. So that is it for this trade. Little clean one here. Actually, very clean. Little scalp here against everything still the same. On a very small perspective, I know, obviously. But as we know, the market's fractal M1 all the way up to the higher time frames, right? So whatever happens on the lower ones will happen on the higher ones. So just apply all those concepts to all the time frames, and you'll see, you'll understand it more and more, right? But yeah, that wraps up this study on gold. I hope you guys enjoyed it, and I'll see you guys in the next one.